our challenge is on the part of the consumer protection. What is the issue of the consumer protection? In the past, because of the high remittance costs, the remittance sender they tend to use the informal channel, and with this informal channel, it created a lot of abuses among the remittance sender from other countries, because mostly Cambodia is the recipient country, so you get a lot of abuses and also high costs. So we tend to require this commercial bank actually to come up with the proper rules and procedure in place how you can resolve the conflict with the customer in case of conflict, and also to educate the customer on the fees, what are the fees that they need to pay for the they need to be close to the public on the fees on remittance to one they are related to receive the fund from the overseas. So these are the things that we have asked our commercial bank as well as the remittance provider to do with regard to have their customer dealing with the issue in remittance. So in summary, we have some of the issues like cost, access point, consumer protection, AML. These are the issues that we are observing in our market. Thank you.
Good morning. I'd also like to start by extending my thanks to GFRID, the World Bank, and our big sincere thank you to our hosts back in Negara, Malaysia. It might help, before I start, to briefly touch on what AUSTRAC's role is in the remittance space in Australia. So AUSTRAC is Australia's financial intelligence unit and also the anti-money laundering and counter-terrorism financing regulator. But it also has the primary responsibility for regulating the remittance sector in Australia. So that's how AUSTRAC fits into the remittance space in Australia. So from that perspective, I did cover off on some of this yesterday, but I'll briefly mention that Australia does not have a licensing regime for the remittance sector in Australia. Rather, it is a registration requirement. So organisations just need to register with AUSTRAC. We don't necessarily, there's a small amount of vetting, but from that perspective, the barriers to entry are relatively low. So with those background comments, there's a couple of key themes that I want to touch on briefly this morning. The first is around the challenge in terms of dealing with, I'd say, innovation and technological development. In particular, with a focus in on fintechs and startups. Probably starting around about 2016, we started getting seemingly more and more inquiries from small startup fintechs in almost exclusively falling under the Australian framework in the remittance space. They weren't traditional remittance providers. There was no bricks and mortar. Often they were online, or even if they were falling into the remittance category, they were falling into a space that was a new market in Australia. So from that end, the other comment I'd make about them was often they were quite small in terms of their setup. So often they'd have a technology officer, an operating officer, and a CEO or a founder, and that would almost be the extent of the organisation. So one of the issues we came across early was that their knowledge of compliance, and in particular AML and counter-terrorism financing, was probably not where we wanted it to be for some of these organisations. So what we did was we actually set up a fintech portal on the AUSTRAC website, where we essentially invited or provided the opportunity for established startups and fintechs who are looking at entering the Australian market, or domestic fintechs as well, to essentially send in what their business did and have an opportunity to either get advice from AUSTRAC, and it was usually a combination either of our compliance area, our policy area, as well as our financial intelligence area to understand the risk, to provide some advice around what their obligations may be. And generally, this had two purposes. One was we were able to save those businesses a little bit in terms of regulatory costs. So because sometimes they might, one of the most common ones was, are we providing a remittance service or not? We're not clear under your legislation, we're not sure about the geographic link to Australia, and so they would come to us and ask, and from our end, if we could answer that question, it meant that we were pretty clear on whether we were going to be having somebody now under our umbrella, in terms of our regulation, or someone wasn't going to be covered, and at that point, we probably identified a legislative gap. Now, the other advantage from our perspective was a lot of these fintechs and the startups that were coming in were fairly cutting-edge technology. They were often brand new business models that we hadn't cited before, and so by them coming in and us giving them an opportunity to explain what their business model was, it also gave us a chance to understand and try and keep up with the technology development. So a good example is, if somebody came in with a brand new business model, they explained it to us once, the next time that this got asked, we didn't need to go back and assess that again. We had a good understanding of what this type of product was and could provide some sensible advice around what their initial obligations might be. And we found that through that process, we were actually able to develop some partnerships with some of these, particularly some of the small remittance firms who were starting up in Australia, and they were able to kind of then link us in with other relevant groups and people, which we had to do an ongoing relationship, which was really helpful. And the next thing, which kind of leads me to my next point, which is what I want to bring up in terms of an issue in Australia, and it's not so much an issue, but more of a theme, is around trust. So for those who don't know, the remittance sector in Australia is regulated very heavily on a risk-based approach. So essentially, we don't have a huge amount of resources in terms of our supervision, so we just put them to where the high-risk entities are, or high from our end, because we're the MLTF supervisor, where we perceive there's a high MLTF risk. Now, that means from our perspective, we need to have a large amount of trust in our population. We've got over 600 independent remittance dealers in Australia, 88 networks with over 5,000 affiliates. So it's a relatively large network, and from our end, it's really important that we can trust that they have the controls in place, that they're actually managing their risk, and also essentially not running into any, or alternatively not running into any consumer issues as well. And I can kind of demonstrate some examples of where that trust is, I'd say from AUSTRAC, where we've trusted entities and we've actually had that trust repaid, kind of at a high level and added a more, I'd say bricks and mortar level. So around the amount at a high level, for those who don't know, AUSTRAC's created one of the world's first public-private intelligence sharing units, so called the Fintel Alliance. So that comprises of, in there you've got public, which is us, and you might have, there's also some law enforcement agencies. We've also, sitting side by side though with private, which includes some of our large remittance network providers. And the idea is that if everybody's sharing the information they have, there's a common goal, and this is a theme that's very sort of common in Australia at the moment. The common goal is that no one, whether you're a remittance provider or the government, wants money laundering in your business. Nobody wants terrorism financing to go through your business. So with that shared goal in mind, it makes it a bit easier to start working together to try and, with that shared interest, move forward in that basis. And so we've seen that Fintel Alliance grow from strength to strength, and we're trying to figure out now how to expand that concept out, probably to the next level and the levels down. But it's what that also did was create a culture of trust where you could see that at each point we had we call them reporting entities and regulated entities, particularly remittance providers, who started to offer to help. Now, if they couldn't help by being physically in the space, because if you're running a small bricks and mortar remittance business, you don't have a staff member to give up to come and sit at AUSTRAC and work there. So we started looking at other ways that we could actually partner with remittance businesses. Now, there was a comment made, I think, about 2 days ago around how many people who are involved in drafting remittance policies have actually ever sent or relied on a remittance. I won't try and guess the number, but one observation I'll make is it's not just an issue in AUSTRAC, but also we discovered amongst particularly our law enforcement colleagues, believe it or not, a lot of them didn't actually know what it looked like to be in a remittance store. They'd never actually gone through the experience of what it was like to hand over money and send that. So when you sort of talk about some of the issues around people considering the remittance industry to be high risk, from our end, we weren't quite sure what they were thinking was happening in a remittance business, but there was a perception that every single remittance transaction in Australia, that people were walking in with a black bag and there was no ID being checked, and you'd hand the black bag full of cash over, and then that was your remittance transaction and you'd never see it again. In fact, we actually had a couple of remittance providers in Australia who came forward to us and said, we want to help. And through that, we actually filmed a video with the help of two remittance providers in Sydney, where they opened up their stores, let a film crew come in from AUSTRAC, and we actually filmed what a remittance transaction looks like. And I know it sounds funny if you probably haven't had to rely on that, but from that end, we were actually able to have a product which we could show to people who've never had to use remittance. And you'd had the providers of the remittance, so our registered remittance dealers, talking about the life cycle of remittance, what the funds were used for, where it was going, and also then what happened on the other end as well. And we found that really demystified some concerns around that. But sort of circling back to the original theme, I mean, we don't think that would have happened unless we were able to establish that level of trust. And I'll be honest, it's not across our entire remittance industry, and for us it's still an issue that we've got to work on. But certainly it's one that we're trying to challenge some misconceptions in that space at the moment. The last one, and relating back to the first point that I briefly want to mention, is around digital currency. Australia has started regulating that as of about 5 weeks ago. It's actually, there's been a slight lead-in period, but it'll actually become illegal in Australia to provide a digital currency exchange unless you're registered with AUSTRAC from Monday. What we didn't expect was we had been engaged with that sector right throughout the process, and there was an industry association, and most of it was around digital currency exchanges. The registrations that have been coming in though, we've got over 60 now, and we've still got about another 15 sitting there ready to work on, and so it's been quite popular, but a lot of those have actually come from traditional bricks and mortar remittance businesses. Now, I am not clear on how those two services are exactly interacting, but for us that's a challenge to find out how our traditional remittance market is, where someone we know doesn't have an online presence, but is suddenly now also operating a digital currency exchange. And I think we're sort of starting to see that crossover. So for us, we do see that as a bit of an emerging challenge. I mean, depending on how they're managing their risk, it could be a risk as well, but for us, understanding how the remittance market in Australia is starting to link in with a digital currency, I think is one that we're only a month in, but we're certainly looking forward to the challenge a bit around understanding how that will work. And so that's the 3 main points that I wanted to cover today, but happy to take questions if you have them as well.
Thank you. Thank you very much to all the panelists. I'm certainly in my happy space with 4 regulators here on stage, and I'd like to welcome all of you to type up your questions, raise your hand, and take advantage of this excellent opportunity. And I see already a few questions coming in, so I'll let that populate just a bit longer, and maybe open up with directing a question to you all, which is, we've touched on a few different themes on this panel and others, including AML-CFT, the access to bank accounts, the lack of access to bank accounts, the importance of trust, balance, and de-risking. And I'd like to ask all of you, maybe if you can reflect on the characteristics that make up a balanced and entrepreneurially driven market environment. So what does that ecosystem look like? What are some examples of this? And my background is primarily the Horn of Africa and the Middle East, and so for me, immediately mobile money platforms in Kenya come to mind. So I'll be interested to hear from you about what are some of those characteristics, and if you can discuss it from your own perspective and maybe even reflect as to, do they exist in your particular jurisdiction?
Okay, in our context, we follow what happened outside, like in Kenya or Tanzania or in Brazil, Pakistan, or in India, introducing the payment banks. Then we try to creating our, domestic context, the readiness of the market industry and also the regulator. We accommodate the innovation basically. So in 2014, we introduced a pilot project that now they call it sandbox regulatory. Only few players who have the vision in the retail provide the basic services. We also introducing the electronic money. Our electronic money is quite different with the, let's say, what happened in Malaysia. We have two types of electronic money. One without registration, you don't need to register, with the limit around $70. The other one is with the limit around $700. You need to register. Two type of account. With the electronic money, non-bank can do, can provide the services. Bank, of course, they can do as well. So let's see how they can provide their financial services. We found that still non-bank have the lack the capability provide the how to provide the better customer protection, how to manage the risk. For example, the telco. Now we try to draft the regulation, invite them, how to increase their capability provide the financial services. That's how we call it, they bring the innovation, bring the level of playing field for them. But sometimes market saying it a different way. There is no balance between there is no level of playing field. For the bank, more regulated. Non-bank, we still need put some the basic regulation for them. That's why we call it the balancing. When we bring the non-bank, that's why we call it the balancing, provide the level of playing field. Now when we discuss with about the risk-based supervision in the business, in their business, because we impose them to implement the risk-based supervision as well in their business, it's difficult for them to implement it compared to the bank. Done. Now we also introducing digital KYC again, right? To see how they provide a strategy, how to implement the same thing. It come out of our mind. Let's work together, more closest to them. And currently we done that way. There is another voice saying that don't to market approach, you know. But it seems for me, the balancing is our term. The way that regulators say. No matter what they say, this is the balancing. Not to market oriented, not to regulator perspective oriented. That's the balancing that we call in reality, not only the theory. Balancing. How we done so far. Now come back to the risk. Again, still customer protection and money laundering. Now, probably time will tell how to see the outcome that we believe we can, you know, adjust to the next level. That will be done so far.
Thank you, Ricky. Does anybody else want to jump in on that one? Otherwise, we'll turn to the screen.
I just want to add that it depends on the mandate of the central bank. Our mandate is, of course, to regulate the market, and besides that, we also have the mandate to promote the market as well. In Cambodia, we have a very similar case where we have a very big bank, a very big firm in the past. As you may know, as you may read the history of our market, at first we have GFRID, okay, they have presented here. They entered the market in 2008 by that time, and during that time we don't have any regulation in place. We allow me to operate on what we call the no objection basis. So until 2010, when we issue regulation, what we call the third party processor. So from there, we constantly discuss to the operator what are the risks that they involve, what are the business in that model that they are doing. So we try to provide the supporting roles and allow room for them to grow. And then once the company grow and bigger and bigger, and also present risk to us, not only the operational risk, but also the system risk to the system or something. So require them to obtain what we call a specialized bank license from us. Also to ensure that they operate in the proper manner and to guarantee ourselves that there's no financial stability risk to the system. So again, then one wing operate, what we have a big player in the market, and what is the next step for us. We need to think how to promote competition in our market, and then we try to come up with a new regulation to promote more players into our system. Thank you.
Thank you, Sarat. So I'd like to work through some of the questions here, particularly since Anonymous is quite active. Okay, so what are the panelists' thoughts on the difference in regulatory treatments in different countries with regards to the remittance industry? And maybe, Jack, I'll turn to you on this one.
Yep. So, I mean, I presented on Australia's framework in relation to the treatment of remittance, and it was interesting to see the reaction because we just have a system of registration and it's not licensing. I mean, there's certain challenges that brings in terms of supervision, because essentially there's no cap on the number of people we have. If we have someone who essentially, provided they meet the legislation, they can register. If we're not too sure, or we're trying to catch up, for example, to their business model, unfortunately we don't have the luxury of pausing and changing our legislation. So from that end, it brings certainly some challenges there. But what it also does, and probably reflecting a little bit on the earlier question, because of the low barrier to entry, it means that it really enables particularly small providers to enter into the Australian market relatively easily. And there's no, for example, there's no capital requirement in Australia, so little shops that provide a really unique service on a particularly distinct corridor, there's an advantage there. And I think what's become clear from my end when I've been sort of discussing with different regulators as well as businesses at this forum is that this doesn't seem like there's a perfect way, and that each particular sort of solution that you choose in terms of the regulatory treatment is going to have pros and cons, and it's really going to be about making sure that you select one that best fits your market, and also off the previous panel, doesn't have too many impacts on the other markets that they're interacting with as well.
Thank you. I'd like to turn to Nutt, please, about, where did it go? The agreement between Indonesia, Malaysia, and Thailand with regards to the existing remittance business and the local currency settlement.
Thank you, and thank you for this question. Actually, this is what we call the appointed cross-currency dealer scheme, in which Bank of Malaysia and Bank of Thailand, as well as the Bank of Indonesia, also join together to promote the use of local currency. And actually, for this scheme, we wish to narrow the spread between for the changing of one local currency to another local currency without passing through the US dollar or the euro. And currently, we open for banks, and only in some purpose, for example, just for the trade and service, even not open for the investment. This is on the first stage. And I would say that even though currently we don't have any option for the remittance service, but maybe in the future we may reconsider this because this is really in the really early stage, because we start this scheme last 2 years ago, and the reason that we have to embark on this scheme because we have to admit that all these three countries, we have a really high bar for the exchange control. So that's why we have to talk to each other to relax some more on that regard. Thank you.
Ricky, would you like to add anything from the Bank of Indonesia perspective on this?
It's the same thought what our colleague. We will
Okay,
see
so
what's the impact after the agreement, to see, and if there is some need to be adjusted, we can do it later on.
okay, but maybe staying with you, there's a question here specifically for you, Ricky, which is how do you regulate or monitor the unregistered e-money, the cap at $70 US for terrorism finance activities? Wonderful question.
So basically, Indonesia is the rule-based country. Everything should put in the regulation and everything should get licensed. That's the beginning. Totally different. We are not a common law or principle-based country. Should be regulated. And one of them should be reporting, right? We check the minimum requirements, that the risk management, customer protection system in place, who's your management, you know. Second, if they want to use the electronic money unregistered, there is a limitation. One, the balance, the limit, $70. Second, the usage, only for payment. For payment, currently they're mostly using in the toll road, or parking. Only few to use to pay, you know, your necessary needs, stuff. Because the acceptance is still difficult to boost. Not many people understand the electronic money, you know, because we are a cash-based economy, high financial exclusion. That's why this is the starting point using the electronic money. Last year, our parliament complained to us, you against violate the human right, push the toll road using the electronic money. More work to be done. And when on a monthly basis, the providers report to us many things that we request. What type of the transaction, where is it, based on the area we require it. If necessary, we can ask more non-regular data from them. Or we can do inspection to monitor the, let's say, how to manage the monitor the terrorist financing. That's what we do so far, and so far it's quite effective.
That sounds like a great topic for a lunch table, which will